Hello, everyone. Welcome back for another episode of Trader Talks. Today, we are focusing on the key times of the day and why, as traders, it is important for us to know that, to understand when the key times of the day are, as it can help us on our quest for being consistently profitable over the long term, which, of course, is going to be our goal. Please do remember to like, share, subscribe, give us a rating if you like it. And do remember, if you're listening on the podcast, in the bio is a link to watch along on YouTube. And if you're on YouTube, there is a link to listen along on the podcast. So don't say we don't spoil you. First up then, why does it matter? Why do we need to know the different times of the day? Well, there's different periods within each day where there's different levels of volatility, liquidity, and therefore price movement. You already might think you perform better in certain periods. Is that when there is higher volatility? Is that when there's news that's coming out, data events? Is it on days where there's no central bank meetings? Is it when there's no earnings out? Is it a certain day of the week, a day of the month? All of this information is massively vital and imperative for helping us on our quest. It's important to understand these patterns then, and we can plan accordingly. Remember, we got to be consistent. We want to have an edge in the market, but we got to have a plan and a strategy and really a trading process that we follow each time. Let's just have a quick overview of some of those key times of the day. Now, just before we continue, these are based off people in the UK. So if you're X hours ahead or behind, you're going to have to do a little bit of work here to work it out. But generally speaking, each day around sort of 6 a.m., 6:30, you've got European and UK participants entering the market. So FX volumes start to pick up a little bit. Now, this is important because if I trade the euro against the US dollar, I'm not really going to trade it at 4:30 in the morning. And if I like momentum, because there is not going to be any. However, from 6 o'clock, 6:30, volume starts to pick up. Okay, that's a period where I might be able to take advantage of that trade. We move then throughout the morning to 8 a.m., which is the cash equity open for Europe and UK. So again, if you like momentum and you're trading the FTSE or the DAX or the CAC Coran, chances are volume's going to be picking up from this time. Whereas an hour before, less likely to. We then sort of go through the morning. And of course, you know, these times are set in stone, but there will be periods throughout the week and month where there is data as well that comes in between that. So that's just something to remember. We'll talk about that later. But you've got lunchtime between 11 and 1. What are people doing in Europe? Yes, they're having lunch. So what are they not doing? They're not trading. Volumes die down. So if you are someone who likes higher volume periods, this is probably a time to stay away from the market. Remember, staying away from the market is sometimes equally as important as actually getting involved. Gold volume increases every day at 120, the pit open. So if you trade gold and you like momentum, okay, 120 is maybe where I look to trade it. I've spoke to many traders and worked and mentored many traders who really struggled trading gold in the morning, but the afternoon is when they perform best because they like that momentum, whereas they try in the morning to trade it and they're forcing it. No one else is really on the same wavelength. Oil volume increases at 2 p.m. and you can check all these out. Look at the candles on the chart at 2 p.m. for oil. You get a big spike either way, higher or lower, but volume starts to increase around then. We then get the US cash open at 2:30, the London fix 4 p.m. You've got the European cash close at 4:30, and then the US close on Wall Street at 9 p.m. Now, all of these times are important. You know, when in Europe, if you're trading the DAX or the FTSE and it gets to 4 o'clock, 4:30, you ask yourself the question, well, is there enough momentum for it to really continue here? Or do I need to unwind my position? Same thing. If it's 8:30, 8:45 at night and I'm still in an S&P 500, a NASDAQ trade or a Dow Jones, is there much left in the day? Do I really want to hold that trade overnight? These are all things that we can start to consider. Let's just talk about the day, and we'll go through sort of the market open to the market close. Now, typically, the first hour of the market open is going to be followed by higher volatility. Think about if there was news overnight or it's the first open of the week, people are rushing to get involved in the market to buy and sell individual stocks or assets, whatever it might be. And this goes for the European Open at 8 a.m., but also the cash equity open on Wall Street at 2:30. Volume really starts to pick up. People making their decisions. They're unwinding positions from the day before, whatever it might be. It's their opportunity to get involved. So that higher volume can sometimes excite people, but for someone like myself, I always avoid it. I never trade the S&P, NASDAQ, or Dow Jones for at least 15 minutes. I let the cash open do its thing. And if you look at it, it spikes higher, spikes lower. I don't really know what it's going to do. So I'm going to avoid getting involved. And my trade journal told me that if I trade in between that period or periods of very high volatility, I struggle. However, you may perform very, very well. And remember, it's about playing to your strengths. So this can present opportunities for quick price movement. Does that suit you? If not, you've got to remember it does carry higher risk. The first hour after the market open is characterized by that high volatility and increased trading volume, as we mentioned, and it's something for us to consider. However, maybe it goes into a little bit of a sort of consolidation. You get that first initial move and spike, and then the market calms down a bit. So if you're a higher volume trader and you love that first hour of trading, just be prepared that as we get through the latter part of the morning, that's not going to be guaranteed to continue unless there is a new fundamental driver or something. So as we get to that mid-morning period, the market can often experience reversals. The move is exhausted, and therefore you can sometimes get trend changes. Traders need to pay attention to sort of the price patterns and identify potential entry and exits. And again, you're just thinking, does this time in the day suit me? When you look at your trade journal and review your performance, it might be that a certain market at a certain time using a certain strategy is what works best for you. Traders will struggle early on when they have multiple strategies, no process, and they're just trading based off the chart, looking at it, think, oh, I'll do this today, that tomorrow, this in 15 minutes. We need to have that process and understand when we are best at trading. During the lunch hours, then I mentioned between sort of 11 and 1, the market's pretty quiet. People are away. US might be starting to wake up and come to the market, but in reality, it's a quieter period. In quieter periods, markets are more likely to be range bound. Yes, it takes less to actually move a market in a liquid period, but it's very unlikely that other traders are going to have the same idea. Spreads in some cases can get bigger as there's less market participants. So just bear that in mind. Between 11 and 1, it's a little bit quieter. Do you want to get involved in that period? Look at your stats to tell you if that's the right thing to do. Many traders in this period decide to have a break or focus on longer term strategies. I, for one, never trade between 11 and 1. And when I had a sort of mutual fund with a colleague, we would always go for lunch, a walk between 11 and then get back to our desk for sort of 12:30, do some analysis ahead of potentially getting in trades at 1 p.m. As the day then progresses, now let's just talk about the afternoon. Volatility can start to pick up again, particularly sort of leading up into the close of the market. But remember, as we're talking from a UK perspective, you've got to be aware of, firstly, if there's any US data, but also that oil and gold pit open, the cash equity open at 2:30. These are periods where volume starts to pick up for these individual assets. So can provide opportunity for quick trades. Again, is that the strategy that suits you? But you need to be cautious. Like if you're someone who is very good at range trading, are you going to be trading the S&P 500 on 2 minute, 3 minute, 4 minute, 5 minute period at 2:30? Probably not. And if you are, you're probably noticing relatively poor results. However, if there is a period in the day you can see that your performance is much better, that's something to stick at. It really is about playing to your strengths. And I use examples like, why did Roger Federer use a one-handed backhand? Because it was better than his two-handed backhand. Why does Lionel Messi play football mostly with his left foot? Because it's the best left foot the world has ever seen. Hence why he doesn't play with his right foot. Why does Ronaldo not playing goal? Because he's one of the best forwards of all time. Play to your strengths and avoid your weaknesses. So yeah, when trading from Europe, as mentioned, just got to keep an eye if there's any US data coming out. And also, as we get to the back part of the day, you really need to start thinking, do I want to hold this trade overnight, over the weekend as well? Some people feel very, very uncomfortable holding a trade overnight. Yes, you get very, very tiny fees. That's something to consider. But there's also the risk in the small time that the market can close, that a news headline could come out, that because the market is very illiquid, because not many people are trading, you can sometimes get flash crashes. So these are all things that you need to consider before you even get into the trade, but also as you get to the back end of one. As I mentioned earlier, you might be in the S&P 500, it's going well, but you say to yourself, there's not much left in the day here. There's not left enough momentum for it to get to my profit target. I'm just going to cut this trade off. Again, refer to your trade journal. When is the right time for you to keep in trades or get out of them? Other things to consider: earnings announcements, along with those news releases. So you've got to keep an eye on scheduled earnings that come out obviously on a quarterly basis from the US or the UK or Europe, or semi-annually from Australia, for example. Any economic reports, for example, if there's big data in the afternoon, let's just say non-farm payrolls or inflation, the volume in the market in the market is likely to be very quiet. So again, if I like the volume, if I like momentum, trading in the morning before a big afternoon, it's not really going to be too beneficial. Think of it like a big heavyweight contest. Do people really watch the undercard? Not so much. So it's like, okay, later on, we've got a big event, market's going to be quiet. People are sitting on their hand, keeping their powder dry. And same thing for a big week. If we have really, really big data or a big news event on Wednesday, Thursday, the Monday, Tuesday are likely to be quiet. So planning ahead of time, vitally important. A lot of day traders on a Sunday will draw up their plan for the week and identify periods where they're probably going to get involved in the market and also leave it alone. So these events, as we know, can significantly impact stock prices, but therefore create trading opportunities for certain traders. Time zone differences, I mentioned, unfortunately, for those that aren't in the UK, you're probably scratching your head right now. So saying, okay, he said 8 o'clock. That means for me, it's 10 o'clock or 1 o'clock, whatever it is. I do apologize for that, but hopefully it's not too hard to work out. And remember, if you are watching on YouTube, just screenshot the page, print it off, stick it up, and you'll be able to. But yeah, consider the time zone changes. There are a couple of weeks of the year where, if you are in the UK, the cash open goes to 1:30 instead of 2:30. Things like that, massively important. If you're not aware of that and you're in a trade, well, there could be some unexpected momentum or volatility that you haven't accounted for. So this knowledge can really separate good traders from bad traders. And it's these small wins that really can help you on your journey to hopefully being consistently profitable. Other things for us to consider, and this maybe goes for sort of individual stock trading, pre-market and after hours trading. The point I really want to make here is that when the market is closed, or even if you've got pre-market trading, the volume is a lot lower. Liquidity is a lot lower. Spreads can therefore get bigger. You're not always guaranteed to get the exact price that you want. Most flash crashes in the FX market happen during the Asian session when volume is very, very low. And that's a risk you probably don't really want to take. So have a bit of caution. Again, if you're a medium term or longer term trader, you factor all this in. Your stops are sort of bigger, if you like, even though you're risking the sort of a similar amount. But these are all things for us to understand, that in pre-market and after hours trading, volume periods can differ. Personal trading style. Some of you would be listening to this or watching this and thinking, okay, yeah, those periods Sam was mentioning with the higher volume, yeah, okay, that makes sense. I'm going to get involved there. Or you're listening to it and thinking, no way, I hate it. I hate high volatility and I'll avoid it. And I think that's a big misconception for newer traders. You think, oh God, that high volatility, that's what all traders love and need to have. It's not true at all. What works best for you is what works best for you. That could be the quietest market. It could be a market that someone else performs really badly in or really good in as well. So find what works for you. Look back at your trade journal to help you as well. Some traders are going to be more comfortable than others with high volatility in the morning, while others may find it more positive in the late afternoon as well. Tailor your trading approach based on your strengths and preferences too. These are all important points for us. And really here, just in summary of it all, the market open is tending to be higher in volatility. So that could be good for providing opportunities, but negatively could be more risky. Do you perform better in this period? This is the message I really want to get, but also hopefully that this episode of Trader Talks can make you realize when these different periods are and how it can suit your trading approach. We go through mid-morning, we might see potential reversals after the initial move, and then we get to lunchtime and volumes start to quieten down a bit. For some people, that's good. For some people, it's not. If you like momentum, not so good. If you prefer ranging markets and you're happy to sit in for a while, maybe it's a little bit better for you. Scheduled news releases, earnings reports, all things we need to consider and factor in to our daily plan. And just to finish up here, trade at the right time for you. I hope you found that useful. Just again, please do remember to share, like, subscribe, give us a rating. Let me know in the comments, and you can do that on the podcast now or YouTube. If you want a specific video on anything at all, more than happy to do that. But yeah, hope you enjoyed it, and I will catch you all next time on Trader Talks.